Good afternoon, everyone, and welcome to this webinar from James Cooper Kreston. My name is Mike Farwell. I'm Head of Charities and Education at James Cooper Kreston. At the firm, we act for over 200 charity clients. I'm joined today by Georgia Burrell from our marketing team, who's going to deal with turning the slides and dealing with, hopefully, the technology issues which won't arise during the session. So we've got a good mix of trustees and management turned out. So we're going to be covering COVID-19 in charities. The plan is for the session to take no longer than 30 minutes. Hopefully you can all see a presentation on your screen, and you should also have received a link to the survey. Often in these webinars we do include some audience participation, but this time we've taken the view that because many of you have contributed to the survey itself, we give you a rest from the audience participation, so we won't be doing any polls or any other surveys during the session. There should be a facility on your screen to deal with raise any questions that you might have, which we'll cover at the end. If anyone's got any questions post the webinar, I'm very happy to take them. Right, so let's make a start. So if we move on to broad introduction. So you will all remember, I'm sure, the excitement back in March last year and perhaps late February when the pandemic was starting. We gradually, inexorably moved towards a lockdown. Of course, there was a massive amount of uncertainty at that time, although of course we've got used to much of that over the last 18 months. So we did run a webinar in April last year about the impact of coronavirus, as we called it then. And I think the correct word now is COVID-19. We did run a webinar at that time speculating on what the impacts would be based upon what we'd seen in that first month and what we were expecting to see in the future. So the topics that we looked at that time included income, reserves. We looked at the government support that was available at that time, albeit there was huge uncertainty around what was available. We looked at the approach of the Charity Commission. We looked at governance as well. And last but not least, we also looked at potential impacts on beneficiaries. So we thought sort of a year on, it would be a good idea to see what impact COVID did have on the charity sector during the pandemic. But also, I think more interestingly, what will be relevant in terms of how charities may behave differently in the new world that will arise post-COVID. So just in terms of the background to the survey, so James Cooper Kreston is a member of an international network called Kreston. There are around 10 similar sized firms in the UK, and we thought rather than just doing a survey based upon our 200 clients, we would survey 2,000 clients across all the firms in Kreston UK to see what the results were. So we had a good response to our survey. Obviously not all 2,000 charities responded. For those of you that did take part in the survey, thank you very much for your input. So relevant to note, I think that the survey was conducted in April 2021, so around 2.5 months ago or so. And of course, the sentiment to do with COVID does change over time. I think there was perhaps a degree of optimism at that time around vaccination rollout, etc., etc. So the session, as I said, will be split into two. One will be the historic impact of COVID, and the other will be post-COVID-19 impacts. And I think the general theme from the survey is that, and certainly we were surprised, was how positive the sector was about dealing with COVID going forward. So if we move on to a bit more detail, we'll look at the impact on income and expenditure. So those of you that have had a chance to glance at the report will see that we've split the section into some specific areas where there are specific impacts. I think we've seen, those of you who are engaged, well, just in life generally and also in business, will know that some sectors have been affected much more than others. You know, anything to do with travel, hospitality, retail and leisure has been affected in a huge way and continues to be affected. We know that many charities have had huge operational challenges over the last 18 months. And we know within the context of charities that some activities have been more affected than others. So in terms of income generation, the most obvious areas, I think perhaps would be fundraising, where events have not been able to take place. Any charities that are hiring out premises or holding events that's been a problem too. And finally, any charities that are running shops in terms of generating income have also been affected in a major way. So some crossover there between the wider economy as a whole and the charity sector. We picked out 4 particular areas to look at: arts, culture and sports. Not surprisingly, huge impact here, as these organisations were often closed for long periods. Significant use of the furlough scheme, the coronavirus job retention scheme. Some reductions in costs, of course, because they haven't been carrying out as many activities. And also an area where there have been some emergency appeals. So, for example, arts charities have often conducted emergency appeals, and there's also been some funding through the Arts Council. Independent schools, private education, a big impact here. Of course, the various periods of lockdown in terms of schools, but schools were, of course, looking to carry on continue learning, albeit in a different online way, so use of blended learning. So schools typically offer discounts on fees during lockdown of between 10% and 25%. Although some offered more than that. There were a few schools who tried not to reduce their fees, but I think generally they found that rather difficult in terms of the parents' views. So usually 10 to 25%. Big impact in terms of boarding pupils, because often boarding pupils were not able to be at the school, so their fees therefore had to be reduced to the day rate, subject to the 10 to 25% deduction. Interestingly, we act for a lot of academy schools. Broadly, we've seen with academy schools the impacts are rather different, because their income streams are much more secure, funded through the DFE. They've had some impact, of course, in terms of higher facilities, but they've also had periods where the costs have reduced. So a number of academy clients we've seen, the pandemic has had a positive impact on their finances, albeit that operationally it's had an absolutely massive impact. And I think any of you that are teachers or know teachers will know that they'll be absolutely delighted in this last week to reach the end of term. In terms of health, social care and community, the impact really has varied quite significantly here, depending on precisely what the charity does. Some of these charities have had quite stable income, perhaps through government and local authorities, and reduced costs in some areas. Others have carried out emergency fundraising. And we've seen that some funders have been quite flexible about providing funding support of the purposes for which funding can be spent. So there's been quite some flexibility there. And again, some of these charities have actually benefited financially. Overall, it's worthwhile saying that 42% of charities saw reduced costs in this period, which is a sizable number. Of course, many charities, they will say that the costs stayed the same, but 42% a large number, given there are some inflationary pressures in the economy. So COVID-19 has had a sort of an unusual impact on many charities. Sometimes the results for charities have not necessarily been what you would expect. So we've seen some winners and losers from a financial perspective, although I think it's fair to say that overall, like other sectors, the charities have been negatively affected. If we move on to government support, so we asked in the survey how people rated government support. Perhaps worth saying that that score 6.7 is out of 10 rather than 100. So broadly speaking, there was favourable feedback on the on government support. The job retention scheme, of course, the flagship scheme, used by over 50%. Many also used the rates relief, that's around 25%. And there's various sources of emergency funding, as I mentioned earlier, through organisations like the Arts Council and the National Lottery. There wasn't much use of the coronavirus business interruption loan scheme for charities. It was widely used in the corporate sector, not so much by charities where it's been, I think, harder to apply. And many charities have used fundraising appeals, of course, as well. Potentially in areas such as the arts in particular. 30% of charities in the survey accessed no support whatsoever, either because they didn't need the support or for some reason they weren't eligible. So broadly, the government support schemes have been well received. So if we move on to the impact on beneficiary need for support. So we saw 53% of charities saw an increased demand for services. And often we see in difficult times, we do see an increase in demand. Particular impact for obvious reasons on health and social care, where 68% saw an increase and 50% said there was a significant increase. We also saw a significant increase in the number of charities using online services. So perhaps, to do a charity that perhaps might be involved in mental health counselling, for example, which would normally perhaps expect to see people face to face, would move that online. And of course, there have been some quite imaginative uses of online services. So religious charities, for example, have often conducted church services, for example, online on Zoom. So suddenly the whole world is a potential audience. So that has been very successful for some. And I think we have seen charities investing in technology, perhaps in some sectors not so much, perhaps the arts, culture and sport, not so much investment. But many charities have invested in technology, which has helped them cope with the last 18 months. So if we move on to the thorny subject of reserves, and this I think was where we was particularly surprised by some of the results, because reserves are much talked about by charities. And on the one end of the scale, you have charities that have no reserves and struggle to meet the payroll bill every month. On the other hand, you've got big national charities. The RNLI is one that's often quoted, where they have very large reserves over 3 years, I think, of costs in their reserves, although of course they will have been severely affected by the pandemic because much of their income comes from donations and fundraising, which has been hampered during the pandemic. 95% feel they have been resilient during the pandemic, which is great news, I think, for the sector, given the potential doom and gloom we saw back in March and April when we did our original webinar. Interestingly, only 10% of charities had a pandemic on their risk register at the time the pandemic started. I think we will see that virtually all charities will have some sort of pandemic item on their risk register. Also surprising was that 80% of charities were happy with their reserves levels. So this may have been some April optimism, or it may be that charities feel much more comfortable with reserves levels, having gone through such a seismic shock as the pandemic, and sort of come out of the other end satisfactorily. So take the view that they can perhaps cope with whatever challenges there may be. I think charity trustees and management can also take some credit from the way that they have responded to the pandemic in terms of making the right decisions operationally so that reserves aren't significantly reduced. Unfortunately, some charities, I think 20% in the survey, had engaged in some restructuring and redundancies during the period. And I think many charities who have been adversely affected, have taken the view that one of the reasons that they hold reserves is saving for a rainy day. And I think many took the view that COVID-19 was one of those rainy days that they were saving for, and therefore used the reserves to support their activities. Of course, worth pointing out that charities also hold reserves in order to carry out future plans and undertake investments. And I think we have seen many charities have postponed new initiatives, etc., until there was a bit more certainty around what they might be able to do. If we move on to a related topic of survival, again, very positive response here. 97% say they will be able to survive for the following 12 months, although some indicated that they would be able to do so only with difficulty. Little appetite for mergers generally, but we have seen huge collaboration during the pandemic between charities themselves, between charities and government, and also involving the private sector. So potentially some real pluses there for the sector as a whole, in terms of much more of a community feel, and many people, view the world rather differently now to what they did back in February 2020. Many charities, of course, have also conducted scenario planning, looking to see what would happen if they lost a huge income stream or some other major disaster happened. And I think that's given them some confidence in terms of being able to cope with the future. Of course, the government support has been a real help for some charities. I think there's a degree of post-vaccination optimism, although I think this tends to go sort of in cycles, doesn't it? So I think April was a period where people were reasonably optimistic that the pandemic might be coming to an end. Perhaps, in recent weeks, with a spike in cases, a bit of a reduction there, so a bit of a variation. I think we've seen some charities carrying out some fundraising, but that has been difficult during the pandemic, but looking for a return to fundraising as a way of helping them survive. And as I've mentioned earlier, charities have taken the view if their reserves are sufficient, they will feel confident that they can survive for 12 months and hopefully a much longer period. So looking forward in terms of the future and income for the next 12 months, so 65% of people were expecting an increase from current levels, probably not surprising, although 17% were expecting a drop in income. This may have reflected the type of charity that they were, perhaps involved heavily in fundraising or trading activities, and perhaps expecting the pandemic to last into the future. And I think perhaps where we were in April, we were probably broadly expecting to be in a slightly more positive position than we are at the moment. I've mentioned fundraising. I think many charities see that perhaps there's a backlog of donations which might come through into the future. Those of you that know me well will also know I'll put in my usual plug for charities engaging in some sort of legacy marketing as a potential income source into the future, and I think that will continue. I think those charities fortunate enough to have investments have seen some significant ups and downs. I think there's generally a reduction in income. In terms of the value of portfolios, there were huge shifts during the pandemic, but most of those portfolios have now recovered to where they were before the pandemic. So those charities have perhaps got a bit more confidence. There's been some continuity of government funding, so the furlough scheme running on for a few more months. And whilst this is not a source of income, the fact that charities can provide support from reserves is also helpful. So moving on to costs for the next 12 months, I think there is some inflationary pressures in the economy in any case, but 60% of charities expect costs to increase into the future, and 11% expect significant cost increases. So there's a number of reasons why this might be. One, of course, is the fact that some areas of costs were unusually low during the pandemic, and in a return to a more normal world will increase again. So travel costs, perhaps the most obvious example there. But I think given the experience that we've had over the last 18 months, I think we may see much less travel than there was in the future and than there was in the past. And of course, it may well be that things like overseas travel, so those charities involved overseas may do much more of that remotely using Microsoft Teams or Zoom, for example. We've also seen reduced property costs. People haven't been in offices and premises, etc. So those costs have gone down and are likely to revert to normal. There's some interesting observations later in terms of property into the future. And I think, charities expecting perhaps to spend a bit more on technology in the future. So as well as the general inflationary pressures, there are some specific reasons why costs may increase into the future. Moving on to demand from beneficiaries, interesting to see that over 70% expect to see an increase in demand in the next 12 months. And this is on top of the fact that many charities reported an increase in demand in the previous 12 months. So huge demands and expectations of charities in the future. 30% expecting a significant increase. And I think there may well be some sort of pent-up, unsatisfied demand from the past. Perhaps people who were looking for a charity to support them by meeting somebody, for example, may now feel confident enough to leave home to have those meetings. So there may be a huge increase, perhaps individuals who didn't want to engage on online platforms. There's also a potential financial impact on individuals. So employment hasn't increased dramatically so far, but I think in the south of England, we're perhaps in a slightly more favourable position than other parts of the country. But if unemployment increases, generally we see that links with increases in demands on charities. Mental well-being, of course, those charities involved in that area are expecting to see, a big increase, perhaps a long tail coming out of the pandemic in terms of people struggling to cope both with what's happened and the way in which we might work in the future. One issue, of course, will be, if demand is going to increase, what impact will this have on costs, and will charities need more staff to be able to cope with this increased demand? I think the jury's out on that one, and we'll have to see what happens. Will charity staff be able to cope with this difficult period? They've had a difficult period in the last 18 months, learning to do things in a different way. And are we going to see over the next 18 months, or perhaps even longer, a situation where they're struggling to cope with increased demand at a time when they may be exhausted from dealing with the pandemic itself? So in terms of working practices and how we may see charities doing things differently in the future, I think with this one, for those of you specifically involved with particular charities, it's really a question, I think, of keeping your eyes open to see what people are doing and what potential opportunities there might be for your charity. So I think we saw that in the survey that 60% of charities were considering flexible working, perhaps allowing their staff to work at home for some of the time. I think we had expected that might be a bit higher than 60%, but of course there are some charities, if you look at the care sector, for example, where it's rather difficult to offer flexible working. Those of you that are skeptical about flexible working, and you might count me as one of those, I think one has to bear in mind that, if the world is changing so that many organisations are allowing people to work at home, if you want to hold on to people and recruit people successfully, it may well be that you need to offer these things in order to retain and attract the right people to run your charity. 27% of charities were considering their property requirement. I was expecting that to be slightly high, but I suppose this perhaps reflects the fact that no one's really quite sure where we're going. Also perhaps reflects the fact that many charities are in long-term property leases that's difficult to exit at short notice. But this, of course, links with flexible working and the possibility that a charity might become a virtual organisation. So we have seen some charities who have, in the last 12 months, worked remotely and have decided that that's the model for them in the future, perhaps using serviced offices for meetings, etc., or hotels, etc., when they need to have a meeting. And I certainly have one client, for example, with around 20 employees who's decided to adopt this model, and at the moment it seems to be working for them. The key, of course, will be if they can maintain sort of cultural cohesion as an organisation, if people aren't seeing each other face to face from time to time. But of course there are ways in which they can do that. But an interesting case study. Over half were considering more digital services in the future. I think we had seen, George, I think you may have moved ahead. Thank you. 50%, 7% considering more digital services into the future. This is on top of the fact that many charities have offered more digital services over the last 12 months. So a big rise there. Of course, that will suit some people. It won't necessarily suit everyone. So it's a question of working out what digital services will be effective. And it may be that you need to offer a mix of more traditional and digital services. So without being ageist, for example, it may be that the younger generations will find it easier to deal with digital services. Perhaps older people may find it a bit more of a challenge. And of course, charities will look into doing a bit more digital fundraising, I think, in the future in this new environment. So perhaps in a world where people shaking tins and collecting coins may not be the way going forward. I think young people often don't have any coins whatsoever. So moving on to other working practices, I think we saw earlier 50% of charities said that their technology was inadequate at the start of the pandemic. I think sometimes we see that the charity sector can lag a bit behind the corporate sector in terms of the technology that they have available. And 43% said they will increase technology spend into the future. I was a bit surprised that that figure, again, wasn't higher. But it may reflect the fact either that charities haven't really got to grips with quite what their technology plans will be going forward, depending on how they deal with flexible working and how they deal with property requirements. Or it could be that charities have invested in the last 12 months and feel that they're reasonably up to speed. When they've had a long period to work remotely, and perhaps the feeling is that technology they have at the moment is adequate. 55% of charities were looking to place more emphasis on mental health amongst their workforce. Again, I was slightly surprised that wasn't high, but perhaps the other 45% feel that they have already made significant steps in that area. I think dealing with mental health issues is probably something where the charity sector is perhaps slightly ahead of the corporate sector in that regard. But I think, as I mentioned earlier, probably a long trail of mental health issues arising after the pandemic. In terms of trustees meetings, I'm sure many of you will be familiar with Zoom and Microsoft Teams meetings. 70% of charities said they envisage a mix of face-to-face and online trustees meetings. And I think this means meetings where everybody is attending online or everybody is attending face-to-face. I think one of the challenges is meetings where you've got some people in a room sort of face-to-face, and then you have people at remote locations dialing in, and I've certainly seen that often those meetings don't work brilliantly, and you certainly, I think, feel that the contribution from those attending remotely is not as great as it might be as if they were in the room. But it has been an interesting experience over the last 18 months. I think we've seen a huge increase in attendance at trustees meetings. We often attend trustees meetings to present accounts and audit and discuss other issues. And I think we've seen a fantastic uptake in terms of meetings, perhaps because people don't have to travel and perhaps haven't got quite so many other things to do. I think we've seen broadly that meetings are a bit shorter, which I think most people would consider was a good thing. And I think we've also seen that online meetings do enable charities to hold sort of emergency meetings at quite short notice. It may only be sort of 20 minutes or half an hour, but they can make decisions quite quickly. I mean, I think it's fair to say that charities have dealt extremely well with this governance challenge over the last 18 months. I certainly remember back in March, one chair of a charity telling me he thought that coronavirus, as we called it then, was purely an operational issue and could be left to management. But I think he soon learned, as we wandered through March and saw how serious it was, that this was a topic that trustees definitely needed to consider as well. 25% of charities said they'll have all their meetings face-to-face. Perhaps charities with just a feeling that they're just not really getting great input from people operating an online context. I mean, it may well be that trustee recruitment may be a challenge if you have all your meetings online. Some trustees may find that sort of difficult to deal with. And the final item before we move on to questions is just the question of risk management. Now, risk management is often a rather staid topic. Charities sometimes have a risk register. They get it out once a year to look at, and then they shove it away and get it out a year later. We have seen some fantastic examples of really active risk management during the pandemic, and I take my hat off in particular to the school sector, who've done an incredible job adapting, sometimes on a day-to-day basis to changing conditions around the pandemic, changing government advice, etc. Have done a great job. They've often had a separate COVID risk register to assist them in doing that outside their main risk register. So I think it's been a great example of what charities can do in terms of responding to risk and responding to risk quickly. So a huge number of things going forward, the potential impact on charities, and a question, I think, of looking to see what impact that might have for your charity. So if we move on to questions, we've had a couple of questions through. The first is, what score should I give pandemics on my risk register? So this is an interesting one. Obviously, it depends on the charity. I think there's perhaps two issues to consider in terms of pandemics on risk registers. One is how you score and deal with the impact of COVID-19 itself. And I think those of you that have perhaps had the impact of the pandemic and the likelihood, I mean, clearly the likelihood is perhaps 5 at the moment, given that we're still, I think most people would agree, sort of in some sort of pandemic. Impact, the scoring there probably reducing. So if you're working on a 1 to 5 scoring system, you may consider that the impact now is perhaps a 2 or a 3, but very much depends. And then the second element, of course, of risk registers is, we've had various pandemics in the past, SARS, Ebola, for example, which perhaps didn't have the sort of the same widespread impact that COVID-19 has done, albeit quite devastating for individuals affected. So I think, you would be sensible to assume, without, wanting to be the accountant professing doom and gloom. I think most commentators believe that, there may well be some pandemics in the future. So those pandemics you may want to keep on your risk register, possibly with a relatively lower score than COVID-19. The second question that came through was, why do you think there haven't been more mergers during the pandemic? Well, that's a great question. I mean, I think we have over 160,000 charities in England and Wales. I think mergers between charities very much go into the very difficult part. I think the biggest barrier often to mergers is the independence of individual charities. So both the charity leadership teams and also the charity trustees, where there's a feeling that generally they want to maintain independence. Many charities, choose to maintain their independence, where potentially, they could be better served by joining with other charities. Certainly, of those 168,000 charities, only 1% of those charities have got income over 5 million. So there's a lot of relatively small charities. And I think the Charity Commission's guidance as a regulator, whilst they can't really encourage charities to merge, I think their view is that they would probably like there to be fewer charities, but making sure that where a merger is being considered, that the beneficiaries' interests are at the forefront of that. So I think the key question for charities is, would your beneficiaries' interests be better served by a merger with another charity? So I think that's the end of the questions. So you'll be emailed a copy of the presentation if you want to watch it again, or perhaps more likely, if you found it useful, forward it to others in your organisation. The webinar will also be recorded on our website. So finally, I'd like to thank Georgia for her help with the slides and all the other aspects of the webinar, and of course thank you all for attending. Enjoy the rest of your day, and let's hope the temperature just goes down a notch or two over the next few days. So thank you very much for attending. Have a good afternoon.